I essentially was not at all qualified for going into any venture capital firm because everybody looked for either you're McKinsey or you're from Harvard or I'm just highly entrepreneurial, highly unstructured, and I don't like confining things. So things that confine me.
What do you think? What most founders get wrong?
We need to understand enduring success. We need to build for enduring success. And I think most of the founders just find that great 1, 2, or 3 things that work for them, and then they just extrapolate that's the way they're going to have it, and then they get tunnel vision towards that's what they want to build. They extrapolate that that's how they're going to be successful.
What was the learning from your biggest mistake as a venture capitalist?
My biggest mistake is overestimating founders in some cases, their ability to transition businesses to a direction of monetization.
And what do you do when you lose so much money?
I was very stressed because losing money is not good, and losing money in Reliance is not good for sure. I just got to realize that I'm a startup guy. Here's a place where a lot of ground up stuff is going to happen. It's something where I learned a lot from a different perspective. That patience is a great virtue, and doing things which endure over a long period of time are the right things to do.
कॉलेज में आपने क्या-क्या मस्ती करी थी?
ज़्यादा ही मस्ती की थी. That's why I ended up as an investor.
Do you think going to these investor meetings kind of helps you learn a lot of things? As an investor or as a founder, attending board meetings, AGMs of such large corporations?
Of course. The thing is, it depends on the thing. Like, if you look at Berkshire, it's one of a kind, right? It's such a phenomenal organization. Like, the office is the size of half a tennis court. You have like less than 24, 25, less than 30 people, let's say, which is running probably the top 15 companies in the world. And, they've open sourced pretty much all their learnings and how they've done it, right? They don't hide anything. There's no proprietary knowledge, and they're so folksy and open about it. And that's what is inspiring. So, Berkshire's meeting was like a dream come true for me personally, because I always admired these people because what they said was very simple but very difficult to follow. And that's what they say. Investing is simple but not easy, right? The philosophies are, absolutely, very simple but very, very difficult to, adhere to. And I think so Berkshire's meeting specifically was just an opportunity to go there in person and do this, right? Otherwise, I would always tune to the, Yahoo Finance page and watch some of these things live streamed at night. And, and these go on for like anywhere between 5 to 6 or 7 hours. But, attending it in person is a different thing, a different vibe. And, you obviously read about their portfolio, their companies and all of that stuff. But, when you actually go there, they have the main hall where they talk or do the AGM. And then you have different stands, and then there's a big, large hall of all their portfolio companies. And, we as tech investors are always thinking that, we need to be investing at the bleeding edge of things. But when you look at the portfolio companies like Dairy Queen and Brooks and, Century Homes and things like that, you look at like such traditional, enduring businesses which have compounded over such a long time and generated phenomenal wealth. And it's just a very humbling experience because, these guys have been generating 20% returns year on year for donkey's years, right? So, and then when you go into that room, all that thing that as a VC you think about, you're working on the coolest things, our returns would pale in comparison to the stuff that these guys are doing. And, you just realize that good old fundamental businesses, well-run businesses, which have enduring moats that can compound over a long time, just generate phenomenal wealth. I mean, like a business, we obviously don't, we always think about exponential growth and things like that as VCs, right? Because you're really funding companies at early stages. But if you look at it, a company which grows 20% for 20 years on a compounded basis grows 38x. So, just if you think about that, it's just phenomenal thing to think about, right? So, and somehow it just doesn't fit into a mental model and cognitive model because all of us are so impatient about trying to get rich and wealthy. And, when you look at and study and, visit this place, the Woodstock for Capitalists or whatever, that is just a very, very different experience. So it was just something where I learned a lot from a different perspective that, patience is a great virtue, and doing things which, which endure over a long period of time are the right things to do from an investing standpoint. Very much contradictory to my day-to-day life and what I do as a VC, right? So that's, that's specifically as far as the annual meet from Berkshire was concerned. But, I think I obviously have attended a few AGMs. I used to work for Reliance back in the day, and I used to attend the AGMs there. They were very informative and very broad and very, very, very useful.
But tell us about your college days. College में आपने क्या क्या मस्ती करी थी?
ज्यादा ही मस्ती की थी. That's why I ended up as a investor. जो actor नहीं बन सकता, that person becomes tries to become a director, right? So
Okay.
that's the thing. No, college was fun. I was coming out from school, I was not very sure about doing engineering. I did science with eco and all of that stuff. And, I really thought that I'll keep both my options open. And I wasn't a great student by a far shot, right? I was never
DPS.
into, I was in DPS Hockey from the last 2-3 years of I moved around a lot of schools. My dad had a transferable job. So I moved around a lot. The last few years, just given the fact that, RKP is a great school, my parents were really keen that I finished up from schooling from there. And, I was not a good student. And if you ask my classmates from that time, that do they know me and all of that stuff and, any of that. But I was always street smart relatively, in some shape and form, but not academically the most bright student, not because of anything else. I just didn't feel very motivated to be greatly aligned academically, but I was very interested in business from a very early age. My dad used to bring all these magazines that he would subscribe to. And I still remember, he would come from office and the first thing I would do is go into his bag and read all the newspapers, all the business newspapers that he'd bring and magazines that he'd subscribed to. And I'm talking about like mid 90s and beyond, right? Growing up, I had the opportunity to read all these great magazines. At that time, there's obviously Business India, Harvard Review, and, Business Week, and all of these magazines. Used to subscribe to them. And I used to love just digging into them. And that was like my passion, right? So I learned about businesses from that standpoint. And my dad was a hotelier and, very grateful to him because I got a great exposure into meeting with people from all businessmen and industrialists and things like that. So I learned a lot from that and I had a very good exposure set. So I was very ambitious as a kid, but not the most academically inclined. But I was to for example, sit and read Fortune magazine in the backbench of my class when classes were going on, because I found that much more interesting and I like reading about stories about people doing stuff. So, that is, my growing up, and I had a penchant for kind of wanting to do something with business, and I liked technology. It was coming up. You had all these great companies. I remember I was in Bangalore when Infosys went public. I was here with my dad during summer holidays, and Infosys had just gone public at that time. And, there was a buzz of sorts around it in a very, very different way in this part of the world. That is this tech company which had gone public, and it was a very small issue. It had barely scraped through and all of that stuff. So, I still remember some of those are my childhood memories. And, the things was just starting out and there were tech companies. And of course, there was anybody growing up in the 90s, you had Bill Gates, and he was like the guy, right? And I think everything was all about, right, how Bill Gates so that all that stuff was very inspiring because all these things were falling into place. The internet hadn't really come up, and so that was my limited exposure. But getting out of school, I wasn't sure whether I wanted to do engineering or not, and of course, I taken my CTs, all of that stuff, and I wasn't sure whether I wanted to go do my CA. And I had more of a liking to wanting to go and do a CA course or, just do economic honors or something like that, business economics, or do engineering. And, my dad always had this strange respect for engineers, and
everybody in the society had.
Everybody, back in the day, of course, the choices were very limited. And, he always, whenever he met somebody or who was doing well, he's like, he's an engineer. That's why he's there. So, I had this thing that, somewhere in the back of my mind, my brother was a commerce graduate and all of that stuff. And, I think he wanted one son to be an engineer of sorts. And then I thought about it and I said that, should I go and do my CA foundation and economics and be in India, or do I get this thing to go abroad and study? And then I just somehow, spur of a moment, I don't know what came about me, but I said, okay, let me go and do engineering. My parents will be happy. I'll also get some exposure. I wasn't a great student by a far shot.
And then you went to Illinois.
Yeah, I wanted to go to I got admissions in other colleges as well, but I wanted to go to a big city. One of the things I wanted to increase my exposure from that standpoint.
Do you call that Illinois? Sorry, to Illinois or Illinois?
Illinois.
Illinois. Right.
S is silent.
Silent. Okay. So,
I often have a joke that my parents wanted me to go to IIT and they just weren't specific about which IIT, right? So I just ended up in IIT, but the wrong one. So.
And how did the segue happen into the investing world? What was the first point when you thought, "Yaar, let's invest," and how did it all happen?
So I was working with UT as a product manager. I was doing fairly well there. But one thing was that, I obviously did my undergrad in the US. I did think that I would go and do an MBA in the US. I thought that I'd go back, do an MBA and come back. That was a done thing to do. And, one of the things was like, I should, before going to B school, you need WorkX, right? So I said, okay, I'd work for 2.5 years, about 3 years before, towards the end of UT Stockholm. And I said that let me get more experience around the space. I'd done a lot of stuff around wireline networks and, telecom, from a broadband core network standpoint. And I said, let me explore other opportunities, outside of UT Stockholm and get sort of some more varied experience. And that's when I joined Ericsson. In 2005, and I worked there for a year. The learning from that was that I'm not a big company guy. I was doing fairly decently well there, but that's not saying much because I wasn't doing much.
What do you mean by I'm not a big company guy? What happens when you are in a big company?
In a big company, it's a lot more confining, right? There's a lot more structure. There's a lot more things. And, outside in looks like, oh, wow, this is such a great brand. This is like the Goldman Sachs of telecom networks. And, with so much respect, people looked at Ericsson. It's a great company. There's a lot to learn, in many ways. But it was also a very, very slow moving company, right? Because there were a lot of processes, a lot of very, very conservative, in many ways. So when I was in there, a lot of people outside had a lot of respect. Oh, you're working with Ericsson. It's such a big deal. You're a solutions architect. And that's very great for 25 or 24, 25 when you're there. But, I just got to realize that I'm a startup guy, because my first job out of college was a startup. UT Stockholm was a startup. It was a very fast growing organization. When you were there, you just felt everything was broken and you used to crib about it. But then, when you went into a big company, it was just too structured and confining. And then you're like, holy shit, I used to move so fast in those places and do things. And they were so much more entrepreneurial. And being in a big company, by the time I learned the lingos of all the different units within the company, and all the lingo everybody was talking about, I had spent 4 months to just understand that. And, it was so confining, so much of, we are thinking about this. We are thinking about doing this in 2-3 quarters. And, let's not do anything right now in this space. And, I just felt like, that's not something that I wanted to do. So when I was at Ericsson, I started, I one of the things was I was a solutions architect. So two or three things happened at that point of time, right, in my life. I said that, I need to improve my chances to go to a B school. And, I to go there, I need obviously great brands. I'd got 3-4 promotions before that. Before getting to Ericsson, I was one of the youngest solutions architect at Ericsson. And, while I was there, I got to realize very early, like 3-4 months in, that this is not the place where I want to be. It's a great company. Don't get me wrong, but just not for me, right? I'm just highly entrepreneurial, highly unstructured. And, I don't like confining things, so things that confine me. So, one of the things as a solutions architect you would do is essentially put together a bunch of different solutions together or products together and, tie in with a business problem that your customer would have. Like an Airtel would come and say, "Hey, we want to launch a mobile TV solution. We have this network technology that we're deploying, and we want a business case for mobile TV to work on it. Can you come up with a business case? Can you work with us and assemble a technology stack for doing that?" Of course, Ericsson would have the core networks and the broadband technology and all of that stuff, the RAN and everything, and the base stations. You would enable that on to enable broadband on the stations. But then this was all about applications, encoding, and all of those things, right? So Ericsson had a certain amount of solutions that they had, but to assemble a mobile TV solution, we needed to go out there and look for other pieces that we could tie together and build this for, or as a use case for them to upgrade from 2G to 2.5G or 2G or 2.5G to 3G. We had to provide them a case that why you should invest into your infrastructure, thinking about data in the future, right? And these are the killer applications. So that involved, my job was to actually look at all of these small companies, look at how their solutions would tie in together and propose that to this, and then do the advocacy in terms of the business case for telecoms, working with the key account managers. That was my job description, right? And while I was studying a lot of these small companies, these were all venture funded. And, and when I was studying these companies, I would say, hey, this company is very cool. But, people would ask me, are they stable? Are they financially backed? I said, okay, well, that's a good question. I didn't know that, right? So I would go, then I started looking up all the pages of these companies in the about us sections and investors. And then I started looking about these investors, which are behind these companies. And, and then that got me to the sites of some of the investors. And then I started saying, wow, these are really fancy profiles. What is venture capital? These are the guys who are backing some of these really small companies, the Sequoias of the world, the Kleiners of the world. And, all these, the benchmarks of the world were funding some of these smaller companies, right, in the telecom space. And that got me excited about the thing. Okay, so this is what these guys do. And those people all had operational backgrounds, essentially, and they moved into doing investing. So that was the germination of the idea. And, honestly, I said, okay, how do I get to do this? And I said, okay, I'm doing an operational role, but this looks really cool because it's technology and business and finance. It's a great combination. It's a confluence of all those three things. And, how do I get into this? So that's when my outside-in obsession with this thing started. And obviously I was doing this with Ericsson and I realized, oh God, I can't be with a big company. And then this, thing with the venture capital happened. And, I was an engineer, worked with UT Starcom, American Wireless Broadband, and Ericsson. And I essentially was, at that point of time, not at all qualified for going into any venture capital firm because everybody looked for either you're McKinsey or you're from Harvard or a Wharton or any of those things. Then those venture capital firms would look at it. The industry was very, very nascent at that time, right? It was just about starting out. There are 3 or 4 funds on the venture capital side at that point of time in India. I was based out of Gurgaon in India. So, and that got me to think about how do I break into the world of venture capital. So, I said, okay, I need to know finance. I understand technology. Okay, business I should try and understand and learn. So that was all about reading magazines and these are that. And magazines, talking to people, doing all of that. And, obviously when you're in a company, you're seeing how, Bharti is a multi-billion-dollar account for Ericsson. Reliance could be hundreds of millions of dollar account. So you understood business, how things were happening. You'd be around very smart people at Ericsson or UT Starcom and you could see how business was getting done. But, the finance world was very new. So, I started looking around what can I do to learn finance because I didn't know jack shit about it, right? So I started doing my CFA at that time. While I was working, I realized that's the one thing that I can do. And I also thought that it would improve my chances for doing, getting into an MBA and all that stuff. I started, cookie cutting myself and I got very frustrated with it. And
I know that you have a very strong views about why one should not go for an MBA.
Yeah, exactly. And that came from that journey, right? So the journey that I'm talking about, it came from all of that because I went through those same trepidations. You always want to look for external validation. And if you stop looking for that, then you're a lot better off. So, when I was going through that journey, I was sitting in, I was studying for my CFA in Khan Market in a barista and, and I was really thinking to myself, how will I ever get into venture capital? What is this thing? And, how, I obviously had an idea about it. I started working on this financing, but, I was just, this like sometimes things happen for a different reason. I was sitting there on a Sunday trying to read my books, obviously struggling with CFA because I didn't know jack about what all that meant. But I was like trying to read as much and I had to take my mental barrier off. And 3 years out of college, you're not really good at academics on reading and things like that. So I was struggling, but doing my stuff, trying to do my part. The only thing I knew was that I had to struggle doing this. But I was, starting to like what starting to make some sense to me. And right next to me in the table, I had my back here and, I had obviously read Business India and all of that stuff, and I saw Ashish Dhawan's photo I'd seen that photo, and Ashish Dhawan just walked into the room, into that barista and Khan Market, sat right behind me. And, there was some student who'd come back from HPS who he was talking to at that point of time. He was right, our backs were facing. I, of course, knew it was Ashish Dhawan. I obviously didn't know what to do. And he was the big shot, right? And, I knew about the private equity, what all that meant. And, I just, over the next 1 hour, since he was talking to that candidate about India, private equity, opportunities, venture, all of that stuff, then I had my books in front of me and I was thinking, what do I do with my life? How am I going to break into this? And, it's just, this guy sitting next to me was giving him all the gyan about it. And I was all ears there. So I was sitting there like this, but, listening to his conversation. Little did he know about that butterfly effect in my life that, I got inspired that this is the only thing that I want to do. Because he was talking about venture capital and he talked about that to that particular person about how, that person also was like, I want to be in more innovative things than private equity. And he talked about how the industry is small and everything. Obviously, Ashish would never give me the time of the day for an engineer to come and talk to him at that time, right? Neither did I have the confidence, to be honest, to talk to him and get any time from him. That 1 hour of conversation just inspired me. This is what I want to do. And whatever happens, I'm going to break into this. And, that really, those are the two things. When I was, thinking about going through these websites, seeing all these firms, being enamored by it. Also, listening to Ashish. And since then,
what did happen? मतलब उसके बाद आपने क्या करा?
So after that, I was supremely convinced that this is the only thing I'm going to do. Now I'm going to get into this space, whatever happens. So the next week, I got all the more motivated to do my CFA level 1. And so I started studying for that very hard. Like I was like earlier, karte hain, kuch karte hain, reading and things like that. But I said, this is my chance to break in, because I'm not a McKinsey analyst. I'm not going to Harvard. I'm not going to done my MBA. I don't want to go down any other path, and I'm going to have a technology skill set, and that's going to be really relevant for getting into venture capital. But people don't understand. I need to find the right people. So next week after that, I got very inspired. This was 2006. I put my mind and heart onto doing my CFA. I cracked the level 1. And I started applying to a lot of venture firms. Luckily, Ericsson gave me a lot of time because I had very good ratings in my job, and I was so sick of it because, it was just such a, it wasn't a fast moving organization, but that gave me a lot of time. So I was reading a lot of papers. I was reading a lot about technology and I literally was preparing for an interview, which was not going to happen, right? That how do I break into it? I still remember, writing to a lot of funds as an engineer, that I'm doing this and this is what my interest is, and nobody gave me time of the day. I somehow, I don't want to talk about it, but this guy was a peer with me in the industry, and he interviewed me and he said, I said, please, can we talk? And he's like, you don't even know what a term sheet is. So, why would you join a venture capital? You don't have an MBA. And this gentleman, is, still known to me, but, has a very sheepish look at when we meet these days.
Is it a big venture capital firm or something?
He was a VC. I think, I think now he's become an entrepreneur, but, he had a lot of arrogance around himself, and he thought that he was very, so I still remember that, I just took all the setbacks and that I had not getting any opportunities, and said that how can I make that a positive? Nobody gave me time of the day, to be honest. And actually this person was fairly rude to me, and I've never forgotten that, conversation that you're just an engineer. What, you think you're going to get into venture capital? And, I had other people in my previous jobs that I talked to about, getting into VC and doing this, they all said, forget it. You're not going to be able to get into venture capital, or you're not going to be able to get a break here. So, you should just go do another role, an operational role.
So for first break, kaise mila tha? What was the first investment
So
that
the
you made?
break wasn't the thing. So, I was obviously in election and I started applying. None of the people gave me a break. I didn't get an opportunity to do it. And then, I stumbled upon one job opening, because I started following the VC industry. There was a site, VC Circle, which I started following. There was an opening which came on VC Circle. I used to apply for everything. I just realized that Reliance Capital was starting out a venture capital firm, and they're looking for founding team members, like early members.
Right.
And I knew Reliance was, and I'm talking 2006 end, right? Reliance obviously had big plans about doing things, and Reliance Capital was an asset management company and very successful one at that time. Obviously went sideways, but it was extremely successful at that time, at that point of time. And they were starting out a private equity, venture capital, and all those things. And I said, okay, these guys would understand my skill set from the standpoint of me understanding telecoms, networks, and all of those things, and technology. And, by that time I got my CFA level 1. I said, wow, I got the level 1. I have some very basic understanding of this. And, then I started talking to the people. I got my first break, end of 2016, joining as a second team member in that team. It was a subsidiary of Reliance Capital called Reliance Ventures. And they were going to deploy proprietary money out of the group's balance sheet into early stage companies. So really, that was my first break into the world of venture capital. I moved from a very comfortable life in Gurgaon, staying with my parents, to Bombay. And, I had other options in between, going and working with bigger companies. And I said that, I'll do this for 2-3 years, and then I'll go for my B school. And, so that's how I landed up in the thing. I went through multiple interviews. I think about 7-8 interviews with Reliance through different people, all of that stuff. They probably felt that I could diligence out companies on the technology side, because I was fairly decent at that time on that front. And they said, okay, this guy has some interest, and this guy is US educated. The person who hired me was from MIT and Wharton, and I said, okay, I can work with this guy. And, I was so enamored by all these degrees and all of that stuff that, I'll go work with him, and, this guy potentially can write me a recommendation. And, I'll also get this big dream and big ticket of going to one of these fancy colleges, and I'll also become fancy one day. Right. So, I was a kid, so I was 25, or 25, 26 at that time. And then that's how my first break into venture capital started in 2007.
Beginner's luck while you do it.
I think it was more a beginner's curse, because 2007, when I joined the venture industry, the world was again very similar to 2020, 21. World was awash with a lot of liquidity, and a lot of craziness was going on. So I often joke that investment, and exactly a year later, you're looking like a chump. Right?
And what do you do when you lose so much money?
Yeah, no, exactly. So, I had sleepless nights. I was very, very stressed. I was 26 at that time, or 26, I just become 27. I was very stressed because, losing money was not good, and losing money in Reliance is not good for sure. So, so I learned that way. But, despite of that, I realized that you have to constantly reinvent yourself in this business, and you have to constantly keep evolving and doing newer and newer things. And that's exactly what happened, right? My next things were all about investing into being multi-sectoral, understanding the business a lot better, understanding the sectors, the cycles. So it was really baptism by fire, because I learned about many other aspects. Nobody sat down and taught me about anything. Unfortunately, I've never had that opportunity that somebody sat down and taught me.
Then how did you learn all this?
Doing things on the job.
So tell us, why did you start Nexus?
Yeah, so I was a founding member of Reliance, this team, the Reliance thing. I was a second employee when I say founder. I didn't found it. I was a second person in the team when it got started, and they had other colleagues as well. The thing was that we were doing proprietary investments from the balance sheet, right? And Reliance was obviously at one point in time a very, very large Reliance Group, which is the Anil Ambani Group. Reliance Capital was very, very prominent at one point in time and doing very well. They obviously wanted to move to being a bank, and they were going to apply for a banking license. And when you do a banking license, then you cannot do venture capital as a part of that, right? So then, that was one part. The other part was, more importantly, I think we were still figuring out an answer to that. We tried to become a fund, but if you know the time in history, the telecom scandal happened. Reliance was right in the middle of it. The Reliance Power IPO bombed. In front of me, and while we were talking about investing and backing all kinds of entrepreneurs, we could only invest the profits of the group, right? Because we had not got external money. I learned very deeply about what funds are. Funds raise dedicated pool of money, and they're separate, and they have committed money to do things. Here it was deploying balance sheet money, which was under deep stress because you had Reliance Energy, which was not doing power, which was not doing well, telecoms, which was not doing well. Capital started suffering, and the capital was the only cash cow. And, from there, all the money was going to support the other parts of the group. So you learned, I was sitting there right in Eagle's Nest on the headquarters and seeing disaster all around me. And I realized that, the fund orientation is obviously a lot better with their dedicated pools of capital, and this is all that they do. And being in a corporate venture firm, it's, when things are great, you get to deploy a lot of money. Things are bad, you don't have money, and you're the last in priority to get money. And, with all the issues that the group was facing, I think, they kind of slowed down their investments. And then it was like, when they started slowing down investments in a big way, it became very clear to me that, being in a fund, incentive to be with the carry structure and all that stuff makes a lot more sense. And this was in 2011, early 11, that, I decided, okay, now it's time for me to step out. So 4 years into my journey at Reliance, I started thinking about this. I did think about going to B school in between, but I gave up that idea. I said, it was crazy because after the dot-com crisis, I was sitting and interviewing people. I was 29. I was interviewing people who were 32, 33, out from HBS and couldn't get jobs. And they would trade positions to be with me. And it was just such a big wake-up call for me that, that market cycles and, all of that stuff, right? So I said that, do I want to work to be this and be back here? And, and I'm learning so much more by making mistakes and in some cases doing well that, I didn't give up the idea of going to B school. I said, okay, let me go out and talk to other funds in the industry. And Nexus was obviously in its second fund, raising its third one, very early, into its journey, 4 years or 5 years into the journey, 4 years into the journey. And that's when I decided to join hands, and, they decided to bring me on. I was in Mumbai as a VP, and I worked with them, and it's been 12 years now.
You mentioned investing is easy and simple, but yet, what
investing is? The principles of investing are easy to understand, but difficult to implement.
Can you double click on this?
I think the thing is, you're dealing with human psychology, right? I mean, you don't know what the right price for anything is, right? It's all subjective, right? You can do all the math, but markets can be deeply irrational for a long time. The markets are deeply irrational right now on the pessimism front. They were deeply irrational on the optimism front, right? So what do? Like, there are a lot of companies which are valued the way they are today because people are only optimistic that they will just, there'll be all this liquidity in the world and all that stuff. So, the investing principles are simple. Buy low, sell high. What is high? And that's where the wisdom of investing through cycles and all that stuff is so important, right? And being in companies which you don't want to sell over decades is the best answer to do things. And so that's what I mean, that, the human psychology gets the best of you because if I don't know how bad things would get, despite being an investor for such a long time in venture, I should have ideally sold a lot of my positions, right? If I could. But I didn't because I thought that, things would be great and they'll continue to be great. I don't have major regrets about it, because if you're looking at a long-term horizon, it's all fine. But, would I have looked better or would I have made more money for the fund? Potentially. I think that's the answer for all of us, right? So theoretically, buy low, sell high is a very simple thing, but very difficult to follow.
How do you do
What do you know what is low? What do you know what is high? Right? And that's what investing and then getting a trained eye is all about. So, it's very easy to say, okay, be greedy when others are fearful and be fearful when others are greedy. I mean, that's what Warren Buffett, Charlie Munger would say. But, when you're in the midst of it, nothing looks like everything is rosy tinted, right? Everything feels like, oh, this is going to be so huge. And just acting on those decisions is not straightforward. So that's what makes the part not so simple to implement.
How do you do that? For example, you have invested in companies like Paytm and all those big, and you are on also board of such companies. So two things. Number one, how do you value a company at such an early stage when it's not a publicly listed market where you can compare the PE values and stuff like that? So how do you go about it?
So 85-90% of the time, at least what I do for a living is investing into people, markets, and that's what you're really trying to do. As early stage investors, that's what you're doing. Like when you're late stage PE or public market investors, where you essentially have comparisons and things like that to kind of invest behind. And you have comparables, you can do things like that, right? But like if a postman comes to you, or let's say Asura comes to you, or like in 2009, I had the opportunity to invest in 197,
Paytm.
right? Before it was Paytm, right? There was no Paytm then. There was no mobile revolution. There was no payments. There was none of this.
What was the pitch then?
The pitch was very simple, that it was a profitable, vast company. They had obviously had Paytm as one of the investments that they'd made. It was one of the use cases, but it just came down to the fact that, profitable, interesting company, and a very, very good founder. I think it was just a sit down with Vijay. I still remember that in July or August of 2009, when I had the opportunity to do that. And it was just a phenomenal meeting, one or 20-minute meeting where he walked me through the entire vision of what it was. And I had only that one meeting to decide, right, whether we should do this or not do this. And because there were competitive bids and all of that stuff to buy a stake in the company. And I had to act very fast. So, I remember going to his office in Noida and sitting there and chatting with him. And he is just way beyond the clarity, the thinking, his ability to articulate what would happen in the world of VAS, how we scale and build a big business and all of that stuff. I mean, it's very easy to connect the dots back then, but he was very inspiring. Inspiring enough that in 1 or 10, 20 minutes,
He convinced you.
he convinced that, that makes sense to do. And that's when he decided to invest into the company, buying out one of the early angel investors. And we invested into the company in 2009, if I'm not wrong, October 2009. And then the value of the company was 560 crores, if I'm not wrong. And, and obviously that investment ended up doing quite well for us at Reliance. We sold it right in the madness of 2017.
Wow.
And at a value which is higher than what it is valued today. So, it's crazy. But, I do feel that Vijay is an exceptional founder, and he's maturing and he's growing, and I think that company will be a very interesting company. Like, when you look at companies from a short term, there'll be blips. But if you look at the life cycle of the company in 10 years, 15 years, it will be a large company.
You mentioned you don't invest in companies, you invest in founders.
Yes.
What do you mean by that? Can you break down? What do you mean by give us examples of some great founders and certain qualities of these founders which led you to invest in them?
That's what, so it's very easy for me to connect the dots now on success, right? So I don't by a far shot claim to be any expert on this. I just honestly trying to get better every day potentially in it. So, all comes with all humility here. I make a lot of mistakes. I'm fairly stupid. But, if you look at like great founders, right? I mean, if you look at the architects, Vijay is a very, very strong founder. He has surprised us, built enormous value in platforms and done a lot of good things. You look at Postman founders, right? The first time I met the Postman founder, I obviously knew that he didn't have a job. He was developing websites for a living. He was theoretically, his previous company hadn't panned out. I'm talking about Abhinav.
Okay.
So the first time I met him was at Leela here, and I still remember he met me at the crossroads in his life where he developed a tool as a side project, and he had an option back in 2014 to sell that project and make $1 million, or raise money $1 million from us and continue building the project. And he came to pitch to me, and I could make out that, this VC guy, who's this guy, and I had obviously, seen the project. I'd seen what they were doing. I liked I kind of got what they were trying to do, because back in the day, my uncle was working on a lot of SOAP and XML kind of stuff, and he used to crib about what the issues are with SOAP and XML and how bulky they were. And, then I'd known that REST was, as a framework, was for dealing with APIs, was coming about. So I'd read some basic things about it. And I knew that this tool was getting adoption, but as a side project, there was no company incorporated, none of that. And you had a founder who came in, for example, in Chappals to pitch, right? He said all the wrong things to do that. Not that I have anything against it. I'm in Chappals. I love founders like that. But I'm just trying to tell you that, you don't go for these stupid things. You go for the content. I can tell you that particular meeting that I had with him, he was very nervous. I still remember he was sweating, pitching to me, and he wasn't sure about what I would think about it. He obviously had a very, very, very clear mind. I can tell you that from that pitch till date, not one thing has changed around his execution and vision, and how he wanted to build that company and how it would unfold. Obviously, like with every company, there are messy middles and all that stuff, but his vision around how Postman would be the platform for developers, to work with APIs, that hasn't changed and has only evolved, and it's exactly the same pitch from that day. And I still remember meeting him and being extremely blown by this 24-year-old or 25-year-old person, and just the level of clarity of thought process that he had around how this would work. Such a mature outlook. I think that was the most inspiring thing about that meeting. And that convinced me. And, towards the end, he asked me, hey, I have an offer to sell the company. Do you think I should sell the company? I said, no, we want to fund the company. So, I still remember that. And so we went back and forth, and I said, hey, why don't you show up, and do you have people you're working with? He said, I have two people who are working with me who are, Abhijit was one of them. They had full-time jobs. He was at Walmart Labs, and Ankit was at media.net. And, while they're working and they're contributing to this project, we've all worked together, and we all at Yahoo together when doing internships. But, we saw this problem firsthand there. I said, why don't you put a company together? Let's put a company together and let's go ahead and do this. And he was very surprised at the speed with which I was pursuing him. I still remember it was a Monday, Tuesday when I met him. On Thursday, I said, okay, let's meet in Bombay. And I could make out that he was a little hesitant because, though I was very convincing, but I knew that the air tickets would be expensive for him, right? So, I said, please, I'll make it worth it for you. I obviously wasn't senior enough in the firm to say that I'll give you the air tickets, so please come. I had to give him credit. He said, okay, he took a faith bet on me and said, okay, I'll show up in our office. And, and that's how, I brought him in, and my colleague Sandeep and I met him again. And I met Ankit for the first time, who was working at media.net. He joined the meeting. He was also working full time at media.net. He hadn't quit his job. And that day we decided to kind of invest into the company. I'm very grateful to my colleague Sandeep, who supported me to make that decision. So we decided to then back the company, and, with giving the first million. There was no company. The term sheet said, these are the name of the founders in any company that they do in the future. So literally, because we had no thing. There was Postman, that name we couldn't get. So it became Post.Technologies Private Limited. It was the name that we could get. So,
what was the quality? So
the quality was just a phenomenal understanding of the space, phenomenal understanding of the developer's needs and the pain point, phenomenal understanding around how once he builds this, how he could go into different parts of the API development lifecycle, and how this would evolve, and what would be the value unit by which he would be able to get all these requests, what he called collections, and enhance them through the life cycle of how APIs would be developed. And also the broad understanding around how microservices were proliferating. I'm talking 2014 timeframe, how that would be a very standardized way to do things to improve your time to market on the software and things like that. So, just that level of clarity and that understanding and maturity was exceptionally amazing.
How do founders get this quality of understanding?
Sometimes it's very deep insights about understanding one thing. I would say it comes from an intensity of focus, or deep focus and understanding. It just comes from that, right? When you're doing something and you're passionate about it, and you're doing something and you get great validation for it, then that fuels you to do more and more of that, right? So you're developing for money. He was doing website development, right? But this was a side project, and he was still supporting it and doing this in his house and all of that stuff. And not for much credit and money. There was no money in that one time. There was no company. There's no way he could accept money also. He accept some donations or something like that, right? That wasn't keeping him going. He just wanted to build this out. And I think it was I think it was luck in my case that, I got to an opportunity to meet him. I got an opportunity to spend him, and I could get an opportunity for him to get convinced to take money from us. But I would say I would give all 100% of the credit to him, Ankit and Abhijit, for building out the company. We've been very privileged to have worked with them. And we don't like to take any of the credit from them because they're just phenomenal people.
What do you think, what most founders get wrong? What's the wrong understanding of running a business, which is a clear no for you to invest in a particular company or something? Because the question, if you have to answer young founders of around 20 to 24 years of age who are looking to build companies, what should they not do wrong? Where they can go wrong? What should they avoid? Which you see कि currently सारे founders ये करते हैं जो बिल्कुल गलत है.
No, I think we're all human beings. We all make mistakes. All the investors also keep making mistakes. I don't think I want to be on a pedestal to say that somebody's doing anything wrong. General human tendencies for everybody, whether it's investors or whether it's entrepreneurs, is that, we need to understand enduring success, and we need to build for enduring success. And the biggest challenge is founders seeing small glimmers of success and saying that they can extrapolate to be big. I think everybody makes that mistake. Every founder, I would say, makes that mistake, and that limited success is just going to endure and it's just going to be one way up. And, not everything is going to be like a Facebook, or not everything is going to be, like that. You solve a problem, you get a wedge, but you have to constantly single day in, day out, innovate to keep that edge and build an enduring moat around your business. And I think most of the founders just find that great 1, 2, or 3 things that work for them, and then they just extrapolate. That's the way they're going to have it, and then they get tunnel vision towards that's what they want to build, and they extrapolate that's how they're going to be successful. But that's not the case, because along the way things will change, markets will change. The first 2, 3 customers will not be representative of the entire market. So the most of the founders get it wrong, I would say, in not being iterative enough on a daily basis and keeping an intellectual honesty framework to kind of constantly evolve their businesses. I think that's where I would say most of the founders definitely get it wrong, and don't evolve. I think the business is about evolving with market, in some cases leading the market, and being convinced that the direction where you're going, the puck is moving there. People, a lot of times people say that, okay, that's where the puck is going, but the market's going somewhere else, and they read it wrong. But they still go in that direction. So just an absolutely honest intellectual framework, and that would come from having external board members, advisors, right advisors. It will happen by having great customers who are thought leading, and then building the right advocacy group, and then building a solution in and around that particular space. I think that's what I would say is the most important thing for founders.
So when you invest in a company as a venture capitalist, you have some certain kind of expectations for the company at a certain rate they would grow. And most of the founders, many a times, the alignment is not there. With, the VC wants the company to grow at a particular pace, but the founders of the company want the company to go in a different direction. You are in a board of a lot of companies. What all companies you are currently in board of?
Yeah, lots of them. I think last one is Liquid Nitro. There's obviously Capgrade, Tramex, Ultra Human, Hasura, Unacademy, Inframarket, a bunch of them. Like almost currently around 24.
So how do you navigate through this situation where the founders of the company want to take their time, they want to, navigate the company in a different position, and as a venture capitalist, you want them to grow at a certain pace. So do you think there is a dissonance sometimes between the investors and the founders? And we've seen recent cases like, Sam Altman being ousted from the company because of the board tussle. How do you see these tussles? How do you navigate around these? Do you get dilemmas?
Absolutely. No, everything that we want to do, founders or investors, everybody, both sides, they want to touch everything that becomes gold, right? Everything that they want to do, that's not going to happen, right? It's not going to happen that, and if I've been beaten up so badly in venture and made so many mistakes in my career, then I know that, it's a messy middle point between this and this is not a straight line. If you're dreaming that the company will go from here to here in one line, that's being stupid, right? It's like this, right? It's a very, 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 very messy middle. I think personally, after doing this for 16 years, I realized that very deeply. So, I don't have a cognitive bias in some ways that, things should be great. Yes, we need to align on where we want to get to. So the thing that where VCs and entrepreneurs really need to get aligned to is where they want to get to. How they get to where the freedom should potentially be given to the entrepreneurs. VCs don't run the companies, shouldn't run the companies. They're not capable of running companies, right? They're allocating capital, time, resources, aligning resources at best. If you're a good VC, then aligning some of those resources to kind of help entrepreneurs be successful. In many cases, being out of the way is very important. If Paul Abhinav heard everything I did, his company would have shut down, or any of those guys. I mean, but there are also situations where if he didn't listen to something I said, the company would shut down, right? So our job is in some of these companies is to make sure that we drive through very fundamental premises of business around revenue, around profitability, around growing sensibly. I think every business, and I'm involved in multiple boards in multiple sectors, unlike a lot of my peers. I have a very varied portfolio of companies, from health tech to enterprise to consumer to, supply chain. But one common thread is you're building a business, right? A business's job is to stay in business. You stay in business if you're sustainable. You're sustainable if you're profitable, right? And you're profitable if you have a good economic business model behind it. And that goes on to unit economics. So it's like if you have a big doll, then the basic thing is that, right? And it's the Russian doll, right? So it has to come out like that. So I think aligning on where you want to get to.
How do you align that?
That happens by it will not happen unless the founder doesn't respect your opinion, the experiences you come with, and doesn't happen unless one thing is you buy into their vision of where it goes. In many cases, that happens. In many cases, you converge on where things should go. And that comes from a lot of dialogue of trust, openness, and, in early stages, it's vulnerability, right? When you're starting out, you have all the odds against you. Somebody coming and betting money with you suddenly gives you a warm blanket in the cold, right? I mean, if you start out something tomorrow, or anyway, I start out something tomorrow and somebody comes and says, hey, I believe in you, that potentially has, at a very basic kernel level, human to human is a very fundamental place to start with, that, I believe in your capabilities. I believe in you. I'm putting money where my mouth is. And more than that, I'm going to stand behind you and stay committed to what you're trying to do. I think that gives you a great opening to then open up a dialogue, right? And then say, okay, how do we build this? And of course, you would do that once you buy into the entrepreneur's vision. If the entrepreneur says, I want to build something here, and you think that this thing, then you wouldn't invest. But if you're investing, you already converge broadly around the direction in which you're going. And then you're just basically fine tuning about what risks you want to take out. Any company when it starts out, their team risks, right? Will the founding team stay intact? That's a big reason why companies fail. Can they build the technology and the platform? Will the market come their way? Right? And then, will they be able to raise money once they've taken out these risks? So every company, whether it's a supply chain company, whether it's a enterprise company, whether it's a healthcare company, all of them have the same issues. So, all businesses rhyme, they're not similar. So aligning around, what are the risks that we absolutely need to take out? The lowest common denominator of risks that we want to take out is a good framework to start with the founder and say that, what is it that with this capital, what are the risks that you want to take out of the table? And aligning on that and having a framework to do that in a systematic way, while fully empowering the entrepreneur and helping the entrepreneur think through what they need to do, is probably the most conducive framework for establishing a mutually beneficial relationship where your capital can accelerate his growth.
What are those risks? That's the most important. How do you hedge against that?
You need to judge whether the founders will get along. In a lot of cases, you have two founders who talk differently in a meeting, and you know that they're not going to get along. When the rubber hits the road, you know that things are not going to pan out.
These
are red flags, yeah. So, then you would not back the team. But if you feel that they both are aligned, like I could figure out that Abhinav, Ankit and Abhijit would stick around, right?
How do you figure that out? What questions do you ask?
Yeah, they're completing each other's sentences. They're completing each other's thoughts. They are, they're all in. They're leaving their jobs and there's nothing with $1 million. They're leaving good, high paid jobs to come and do this. They're agreeing to who the Sardar in the company is, like who the Sardar in the sense who's the CEO of the company.
Right.
They're agreeing to those things. They're agreeing to the roles being more finite. They're not all alpha about something. They trust each other to take these decisions. They align on the CEO taking certain tough decisions. Like, those are all subtle things that you kind of judge. So, obviously I'm articulating it to you like this, but if you I'm not saying I'm some great guy, but like any VC in my, who's been this for such a long, doing this for a long time, should ideally be able to sit in a meeting and tell you, okay, these guys are going to get along or not.
This is one thing. What's the second biggest strength that?
Will they be able to build what they're trying to build? That's a technology risk.
Hedge against that?
So, you see early proof points. You do look at their ability. Have they done anything in the past to do that? Like in Abhinav's case, it was very simple. In Vijay Shekhar's case, it was very simple, right? Because he built a profitable company back in the day, a 270 crore business. And, he was making money, making 34 crores in PAT in it. I mean, come on, he was a businessman, right? And he'd done it with very little money and his company was potentially going public, had those numbers. So, there's proof point that he could build a business. He could build an organization. He could hire people. He could, align and still make money out of telcos, which is not an easy thing to do. I know. Right. So, and make money from customers and constantly innovate on a daily basis. That's what vast business was back in the day. And he could acquire companies and he had a vision around what the future would be and how mobile would be a very long, secular growth story over the next decade, 2 decades, and how that would become the platform for accessing a lot of these kind of services and how wealth would be created.
But what about young founders? Young founders, the first time founders, 22, 25-year-old, they don't have...
No, they don't have that. Like, so for example, I've had the privilege to back a team called Triamex, which is trying to build a new age CRO, a clinical research organization, right? And the main founder there, the CEO, is a gentleman by the name of Sarim. And, he's never had a job in his life. He was at IIT Roorkee. We went for his, he was always breaking glass. He was the first person who said, was in the 4th year allowed to go to MIT to study from IIT Roorkee and got credits for it, right? And in the 4th year, he broke glass that way. He was there. He was a postdoc, very bright chap. Started a company right out of that. Just talking to him, I realized there's something very special about this guy. Or you look at somebody like, Hasura founder, like Tanmay, right? He never had a job in his life. Went out from IIT Madras, never had a job in his life. Was doing an IT services company, doing a food tech company. Both of them, obviously IT services company was doing well, but exceptionally bright person and very strong with his concepts and things like that. So it's not that they had previous success, but it's talking to them. It's about understanding them. Most of these founders are mostly, I would say, visionaries, thinking about things much further along. And it's not necessarily that they've worked. And then there are other founders, like the latest investment I've done is somebody who ran Electronic Arts in India for 18 years, right? And they've built a very successful studio for Electronic Arts, highly profitable studio out of Electronic Arts. 5-6 people leaving Electronic Arts and starting out something. So, so it's a mix and match of all of these things. So, some people come with immense amount of experience, some people don't. But characteristics don't change, right? I mean, they're manifesting themselves in that venture, right? So I think just understanding those people is important. Ultra Even founder, I had the privilege to back him at Runner. He was very, we went through very good times, very bad times, very, very bad times. We sold the company. He was the CEO of Zomato, proved himself, built food delivery for Zomato, which is now the biggest value driver for Zomato. Immense amount of things. I saw him in action, came out, started Ultra Human. We incubated the company. There was no idea, but it was just the comfort around the person. It was just the comfort around the team. It was just a comfort around whatever I do with him. I know that there can be something, and just my ability and comfort and his ability and comfort with us to work together. I think that really resonated for us to kind of then build out what Ultrahuman would be. There was no name of the company. The first name of the company was Mosaic Wellness, right? It was not Ultrahuman. That was not what we wanted to do. We thought we'll do mental health. That was the first thing. How do we solve it? Then we said, okay, this idea doesn't make sense. We can't scale this because there's no supply. But my idea of investing $7 million in him at that point of time was not that, we will solve mental illness. It was like, how do we partner with Mohit to build whatever he's trying to do for next? Because I know that I'm backing Mohit. And I know that he has the ability, sensibility, and capability to kind of put all of these things together and build a good company. And I think it took us 1.5 to 2 years to kind of then come out to the thing that we'll do Ultrahuman. How will that play out? We had COVID in between. The company's gone through multiple journeys. Now, after three years, we are aligned in terms of the vision of what we want to build as a global horizontal platform for consumer biomarkers, and how will we build that across an ecosystem of wearables and devices. And that's taken time, that's taken effort, and that's taken thing. But it's been such a pleasurable journey just working with that team. I consider an honor every day, just having the privilege to work with them, or to work with somebody who's trying to build a new age CRO out of India, right? The next version of what a CRO should look like. We could fail, but that's been the case. Or building a Postman out of India, or building Infra Market, which is a leading thing. So all these, they're all good companies, they're bad companies, and whatever. They're but I would say that ability to work with founders and having that impact in their life to provide limited, whatever little bit I know of feedback outside into their ventures, into their journeys, you're really tied to it. Like I get up in the morning at many times, and I'm thinking about a company or a problem or any of those things, right? And not everything works, unfortunately. The power, we are all in the venture business at the receiving end of power law.
Yeah.
And it's going to be that you can be the only thing, a great venture capitalist and a bad venture capitalist. The difference is, in a great venture capitalist, you will make 7 out of 10 investments work. In an average venture capitalist, you'll make 2 out of 4 work. In a good venture capitalist, you'll make 4 out of 10 work. That's the difference. But luck will play a role in 2, 4, and 7. Right? Otherwise, you will not be a venture capitalist for over a decade. That's the way I look at the thing, right? Everybody gets lucky in 2, 4, and 7. But you can get lucky once in the 2. You can get lucky maybe once or twice in 4. But you have to get lucky 3 times in 7. So that's the difference between a average, good, and great venture capitalists. Your strike rates are what define you. And I have a very different articulation around this. And that's how I qualify people. What are their strike rates?
How do you do that?
Around judging whether, they're a 2 out of 10, they're a 4 out of 10, or they're a 7 out of 10.
And as a venture capitalist, what is your biggest blunder what was the learning from your biggest mistake as a venture capitalist?
My biggest mistake is overestimating founders, in some cases, their ability to transition businesses to a direction of monetization. My biggest blunder is that, believing sometimes too much in people. It comes with the territory, but I think that's what it is. Or extrapolating in my mind how a business can go into a direction which it can never go into. And even if it can, the capability of the founders is not there to do that. So it happens in that situation.
You mentioned that everything in life, when we were talking last time, comes from people skills.
Yeah.
Can you break that thought down? Why do you think so?
So I think the single most complex machinery in the world is a human being. It is like, you're different from me, I'm different from the other person. And it just comes down to, I think if you look at it, our DNA between us and a monkey is 95% same, or 90 more, even more same, right? Just imagine the 5% and how we're different, right? Just the 1% change difference in us is going to be so much different from you, from me, from anybody else, right? And I think we're all in the nuance of understanding that how we are 1% difference, and that's what makes it so multivariate, right? So, so I think, and everybody has capital. If I, in at Nexus, I'm helping to kind of transfer money into a company or invest into a company, if we are investing $3 million, our competitors are also investing $3 million. $3 million are same for both people.
Right.
Right? It's not that they get anything different, right? But what are we investing behind is the question, right? What are we investing behind, and how do we really help is what differentiates us. There's no difference between the money, right? The 3 million from here or this,
Right.
it's not going to be, color of the money is broadly the same unless it's blood money, it's, gangster money or whatever money, right? That's a different thing. But I think broadly in our sphere, it's the same thing. So I think, the ability to read people, ability to understand people, and that comes from, I wouldn't say pattern recognition. Pattern recognition is one way early in a venture investor's journey that you are able to judge what a good characteristic of founder are. But you also have to let go of pattern recognition, because the most aberrant founders or the most inflective founders don't fit into patterns.
Give us an example.
Can a 24-year-old guy build the emphasis of CROs?
No patterns.
Sorry?
How do you find a pattern in this?
There's no pattern.
No patterns.
But that's the bet I've taken. Like I would be writing to undertake, right? Can I say a 24-year-old kid? Not kid. Sorry, Sareem. Sorry, you're not a kid. You're my younger brother. But can Sareem build the largest TCS equivalent of the clinical research organization market in the world? He has all the odds against him. Competitors which are better funded, limited exposure, not worked in the US, limited credibility. He has everything against him. So, it's such a binary thing that can he pull that off still and build a company and work with the best? That's the bet. Like, I mean, such a crazy thing to do. Can a 24-year-old person do that? And, I was with him yesterday for a few hours. I looked him in the eye and said that, that's what I'm betting on.
What did you bet on?
That he can. Sometimes he won't believe he can, right? But then, sometimes I believe he can, right? So, and I could be wrong. They're like, we have 80% chance of failure. If next year we're at 55, 60%, I'm happy. The following year, if you have 30% of the chance of succeeding, I'm happy. That's how companies take out risks in due course. They become larger. They are more self-sustaining. They are not fragile. And, they keep getting more customers and things like that. That's what we're really trying to do. We're really trying to say that, can I find that right entrepreneur to do that? Can you tell me a product which has a 55% or 60% market share out of India for the world? Could you believe that a DevTools company would come out of India, has 60% market share in its space for the world in 2014? No.
Wow.
Right? So that's our job. Our job is to have the front row seats to some of these phenomenal people, show up and try and help, and try and keep speed with them. I struggle all the time because every founder that I've had the opportunity and privilege to fund is like at least 500 times smarter than me. And, that's the thing. And my life is even more complex because it's so multivariate from PG to, any of those things. I think that's the fun part. And it all comes down to people, because it's those people who go into office with the same $3 million from anybody and make all the difference. How do they align the market? How do they read the market? How do they put their first, how do they get the validation? How do they establish a unit economic model? How do they get commercial differentiation? How do they get brand level differentiation? It's just so multivariate for a founder to do, because he has to go from 0 to 200, and you don't get to 0 to 200 without going to 0.1. You don't get to that without going to 2. You don't get to that without going to 10.
And then coming again back.
And you will sometimes go -3, right? I mean, you look at Zolo, for example, it's been a painful journey, right? We said that, the India will have an organized PG chain, and, we started off with doing phenomenally well before COVID. COVID took away 2 years of our lives, right? There's no student housing, there's no co-living, there's nothing. We went down to 0. It was the most brutal onslaught that you could imagine. And, then we had to rebuild from there with very little money. And now we're profitable for 3 quarters in our journey. and we potentially will go public. So, there's no straightforward journey. Unacademy did phenomenally well during COVID. I mean, everybody was like goo gaga about it, and they didn't, all credit to Gaurav for him to do what he did. But, last year we just realized that demand wasn't coming back online and it had to go offline. And, credit to him to say that, okay, I'm going to take the bulls by the horn. I'm not Unacademy. I'm in the business of education. I'll go offline and I'll build 50 centers in 18 months. And he's got 62,000 students going in the first year.
Wow.
And that is testament to a founder doing what is necessary and not sitting on a pedestal and saying that, okay, this is what I wanted to build an online education company and this is what I will do. So, you got to give credit to some of these people, right? And it's not easy for them to pull off what they've done. And I think working with people like these is the biggest positive thing about what you do in life.
A couple of questions. What's the recent book? Because as a VC, you are at the cutting edge of any and everything. What are some resources that you read, that you go to keep yourself up to the game?
I struggle badly at that. So I think, our life is about, talking to very smart people every day, and each of them can teach you a lot in 30, 40 minutes. So, just think about it. I'm a very mediocre person, probably definitely lowest IQ compared to anybody around in this room itself. And and any of the founders I speak to, I think I definitely put them on a pedestal because they know a lot more. They're taking that risk. But think about it, right? I am talking to somebody who has thought about what they're going to do possibly for 10,000 hours. Possibly.
Right.
Or they have executed against it, or have had some experience around it, or have a deep insight. So it is my job to kind of catch up to their thinking in 40 minutes to be able to judge them and come up to speed and say, okay, this guy is the person who can make this work, right? So I think and that teaches you a lot. So I learn from my job, right? Every day in, day out, when I'm talking to 5, 6 entrepreneurs, I'm getting to learn from them. So that's the first source of learning for me, right? Because they teach you so much. Like, if I'm learning about hydrogen this week, right? So, or I'm learning about potentially how 5-axis CNC milling happens, right? And how they need to be programmed and the control plane for it and things like that, right? So I think that gives you the ability to kind of learn from their cumulative experience in a very synthesized 40-minute way in a framework which can extrapolate and grow from. So that is our biggest learning. As VCs, we should not look at our job or doing a call as just sleeping with our eyes open. Our job that's the biggest learning because you're getting that synthesized learning during the day. The other thing is obviously reading newspapers and, being on top of current affairs, reading a lot of things. I obviously used to read a lot. Like there was a pay time phase till very recently. I was reading 500-600 pages a day.
Wow.
But now, of course, I have now replaced that by listening to a lot of podcasts about a lot of type of businesses. And, there are learnings from what Atlas Capco, for example, would do onto which is a motor or industrial company in Europe would do for a company in tech, right? So there are transportable learnings across things. So, just reading about that would be, is phenomenal. So I think
has the most impact on your life. Something like that, which kind of, change your thinking in a particular way.
So I don't say that there is, I'm more spiritual that way. So so I would say I do read, I do end up reading the Gita, and I do there's a book, Sri Sai Satchatra, which is an extension of Gita and more practical way of doing things. So I do end up reading those, quite often. I think those are the more baseline, I would say, impactful books around, keeping yourself in check. And, but like, you'll see under the hood, there are like a bunch of books which I'm reading right now, whether it's Elon Musk one, Nothing But Net, The Great CEO Within You, that's the other one, so that's the one. I've got a few books that I want to read over the next few days, which I've ordered, which, I'm going to be reading. But those are the 3 that I'm reading right now as we speak. I just got them under because they were on the table. So those are the 3 that I'm reading right now, Nothing But Net, the Elon Musk book, and The Great CEO Within. So I end up reading, but those are lesser. I end up listening to a lot of podcasts. I see a lot of YouTube videos. I see a
Like-
lot of panel discussions. I just go on YouTube and just keep listening something or the other. Like, Cerebral Valley, for example, conference happened, which was all about AI. So I just went one after the other and did 17 videos after the one after the other around it. Or I listened to the Sone conference year on year and understand about how people are evaluating, talking about their stock ideas, or doing things like that. So and I would listen to Lee Lewis lectures on how he looks at investing. So doing things like that, I was like, yes. Last night I was on trying to listen to all of Vinod Khosla's things around how he's thinking about it. And when he turned 60, 7 years back or whatever, he came up with an entire thing around how societal structure should change. And what are the factors which will make that happen? So that's another paper that I've got there, which I want to read over the next few days.
Wow.
But I was listening to his thing. Last night I was listening to his lecture. How do we, in the 2040s, how will we look back at 2023, and what will be the changes around it? So just listening to smart people like that, really keeps your bar very high, and you get to learn so much from them. And there's the beautiful thing about today's time and age is that they're so open about all their learnings and things.
Right.
But again, the thing is, they are a culmination of such fantastic knowledge and learnings. So,
And how did you meet the most important person in your life?
most important person in my life is my wife. So,
How did you meet her?
we're already doing CFA.
Oh, got
So we're both doing CFAs together. So she
perfect.
was my study partner in CFA.
Got it. Forget about a second that you are a founder and trustee of two universities, Ashoka and Plaksha. What would be your honest advice to a 22-year-old watching this who want to build a business, who is in a college, what he or she should do or what he or she should not do? If you have to culminate all the knowledge of meeting the smartest founders of your journey, what would be that advice?
My advice would be, be extremely humble.
Hmm.
There are so many exceptional people in this world, and who know so much more and are doing so much more, and understand so much more about life than you do. So I think the biggest thing is that we are all on a journey to learn and do things. Never be arrogant. Never, always be extremely humble, and always have a learning mindset. And don't take convention around what you cannot do. And if people are naysayers, use that energy behind you to break through. I think that I would say these are the 5 things that I would definitely tell anybody, that the most important thing is do not follow convention around, this is how things work and this is what it is. Learn to leapfrog, but also learn to understand from other people why things didn't work, why they haven't worked, what is the thing, and always be humble around it. You'll be surprised about how much you can learn from talking to people, being inquisitive, being nice is a superpower. A lot of people don't understand that, right? So being good, being humble, and having a lot of humility in your life is a big thing. And I think my thing is that increase your exposure band as much as you can. Like, talk to as many varied things, read about as many things. Just because you're doing engineering, and I told you this, just because you're doing engineering doesn't mean that don't read humanities. One of the things that I always used to think about humanities is such random stuff, right? And when I started doing my Aspen fellowship and started reading all these texts, and I realized that I've been a fool and an idiot all across, right? I mean, just phenomenal wisdom that we as humans think that, the problems that we are going through are things which have happened in this era and at this time, and we are only unique to us, and the framework and the situation is only unique to us. Literally, you realize when you read these amazing texts and history and things like that, mankind has been going through and grappling through these issues for thousands of years, and they've all been discussed before, and they just keep repeating themselves after every 20, 30, 40 years in different shapes. It's the same wine in many different bottles and under many different labels, but the same trepidations, the same issues, the same things have happened year on year. And humanity is a phenomenal framework to kind of catalyze your thought process around that. And a lot of us as engineers and a lot of things just don't understand that. and just close our minds off and say, "ये तो humanities का student है." Yeah, this guy is, ये तो English honors किया इसने. But the best of mankind is through that. So,
Well, thanks a lot. Thanks a lot for being so open. I believe that we got a lot of insights, and probably this is going to help a lot of young folks with things about, there is a dissonance between how do you put the right expectations, stuff like that, founder stories. These are going to be super helpful, super insightful for a lot of young folks. Thanks a lot for giving
no,
time.
not at all.
Super grateful.
No.